Happy Monday, everybody. Welcome to the week. Today is September 11th, 2023, and I'd be remiss not to note the anniversary of the terrorist attacks, the worst on U.S. soil, from September 11th, 2001. I've become a big history person over the last few years, and it's amazing that days like 9/11 will always mean something to so many of us. And then there are the kids who only read about it in history books. What they don't realize is so much of what we do today is directly from what happened this day 22 years ago. Think air travel, security lines, TSA, pre-check, liquid restrictions, 331, no meeting arriving passengers at the gate, and so much more. We do remember all that were lost that day. History is an interesting thing. I know I talk about it a lot here also. As we get into September, we know that it's historically the worst month of the year, but take that and realize that statistics can be a funny thing. I've spoken about the S&P a lot, but let's talk about the NASDAQ for a moment. According to Bespoke, since 1972, the NASDAQ average September performance has been a negative 0.88%, and it's positive for the month 51% of the time. Weird, no? Add in the fact that, like the S&P, if we end September up 10% or more, the average for the month is negative 0.16%, and their positive returns 56% of the time. Okay, now that I've laid the groundwork, I'll remind you that this market update is all about recapping last week and previewing this week. Last Monday was Labor Day, so the markets were closed. At least that's one quiet day this quarter. Tuesday began with futures a bit lower as the market digested eco data from overseas. The weakness overseas led to the dollar to continue its rally, stir in some Fed head hawkish comments by Waller, and yields rose as well. As if that was not enough, the Saudis and the Russians confirmed updated oil production cuts, and oil was up as well. It was up to new year-to-date highs. All of that was weighing on stocks early. There was a bounce midday, and then news wires went quiet, and stocks had no real direction. Selling came in at the end of the day, and markets ended near session lows. Overall, the Dow finished down 0.5%, the S&P down just under that, and the NASDAQ just slightly negative. In some academic eco data, before we move deeper into the week, the San Francisco Fed, yes, by the way, the same that many think just missed the Silicon Valley Bank debacle, but their economists published a new research note, and one of the notable comments was that the detrimental impact of tight monetary policy can linger for 12 years. 12 years. Really, the Fed overall does not seem to be waiting 12 months, but let's see. Wednesday saw markets open with slight losses on more global eco data, adding in some hawkish comments by my now favorite name of a central banker, the ECB's Klaas Knot. I did some homework on his pronunciation, so if it's wrong, I apologize. He said that the market is underestimating the possibility of a rate hike at their September meeting. This is at the ECB, not the Fed. At least that was not what he was commenting on. Stagflation's concern were creeping back in, and the U.S. eco data that came in hot, inflation possibly coming back around, oil, jet fuel, prices paid in the ISM report, headlines about all the union deals, back and forth info. Fed Beige Book was a non-event. Not much other news on the wires, and in keeping what I told you last week, not much to see here. Overall, the market still traded a bit heavy. The Dow was down a bit over 0.5%, the S&P was down about 0.75%, and the NASDAQ was down a bit over 1%. U.S. stocks did gap lower on the open on Thursday as more eco data, this time German industrial production, missing estimates, more ideas about slowdown, and the news of the day, Apple is continuing to slide as the Chinese government moved to ban the iPhone from government officials. We've said before, as Apple goes, the market goes. Jobless claims were near 7-month low, and unit labor costs headed up. Lots of headwinds on the market. Apple did come off its lows and capped off a 2-day loss of nearly $190 billion in market value. Slow news day overall, later in the day, and with Apple down another almost 3% of the day, it was too much. The Dow was up less than 0.25%, the S&P was down about 1/3%, and the NASDAQ was down almost 1%. Stocks opened near the flat level on Friday. Oil was still moving up, and that is something the markets look for with inflation stickiness. As Goldman set the recession probability earlier in the week to 15%, it was great to see retired Goldman strategist Abby Joseph Cohen, someone who was so fun to watch prior to her stepping away from the daily duties in 2017, point out that with recent news, tailwinds are getting weaker. She did not contradict the current Goldman team, but she did not sound as convincing. Stocks did close slightly higher on the day. The Dow was up 0.25%, the S&P just less than that, and the NASDAQ eked out a slight gain. For the week, the Dow was down about 0.75%, S&P down 1.33%, and the NASDAQ just under 2% lower. Bullish sentiment as measured by the American Association of Individual Investors, AAII, survey jumped again this week, often seen as a contrary indicator. I mentioned energy last week. This week it's up another 1.5% for the week. The major techs were positive for the day at least. Apple, Microsoft, Nvidia, and Tesla all put in slightly positive Fridays. What to expect from the market in the week ahead? We have a lot going on. Actually, Tuesday we'll get the Apple annual fall event, and we should get the rollout of the upgraded products. We'll see CPI, that is Wednesday, and that will be the main focus of the week. On Thursday, China news as well as the usual jobless numbers. More importantly, we'll see retail sales and an ECB meeting to see if they'll actually will raise rates. And our friend Knas Knot alluded to, we'll see if they're going to raise rates. UAW contract expires and they have authorized a strike, and that will not be too good. As of now, far apart as far as we know. We'll end the week with some other U.S. eco data and the University of Michigan consumer sentiment. PPI is in there earlier in the week as well. Before we close, I want to touch on the student loan payments that everyone's been talking about. Yes, they're about to restart. September is when interest starts to accrue again. October is when payments start coming due. Even I've been talking about this being some possible headwind to the economy. With 40 million Americans coming back online with this, I just want to put it into some macro numbers before we head into the new week. Just simple math. According to Goldman's estimates, there was $190 million in payments that have been on the hiatus. And as they come back, yes, for many, it will make a difference for those on tight budgets. But overall, $190 million in a $20 trillion economy, this is just not enough to be too much of a headwind. We'll see if that's right or wrong. We're hearing a lot from the retailers, but we'll have to see if it'll play out. Overall, markets are still facing some headwinds, generally generationally high interest rates, restricted bank lending, especially from the regional banks, excess savings that are quickly running out, cooling wage gains, unless you're in a union, it appears. Add in some asset price decline in the markets, and finally the student loan payments. Oh, and did anyone want to recall that we are facing a possible government shutdown at the end of September again? Is it going to be death by 1,000 cuts? We'll have to see how this plays out. There is some positive. We're starting to see IPOs hit the tape again, not just Vietnamese EV company that we spoke about before, but the British semiconductor maker ARM. That may be the largest since Rivian in late 2021, as well as word on Instacart and others. Just a quick note why that matters. Venture capital money went into many of these companies in 2020, and as they start to cash out, that means more cash, more liquidity, and that's good news for the startup gang. We'll see how that plays out too. As we get going this week, keep nimble. There's quality, not as much quantity in news this week. CPI, PPI, retail sales, just to name a few. As always, this will keep the week exciting. Come back on Friday for some planning ideas, and we'll stay focused on the goals. For now, have a great week and stay in touch.